All right, welcome back. This is the Something About Your podcast. I am Kent Lindstrom. I am your host. My guest today is David Morris. How are you doing?
Doing well, Kent. Thanks for having me.
So, David, one of the big stories of 2022, I imagine, is going to be the
Mhm.
collapse of FTX and the role that its founder, Sam Bankman-Fried or SBF, played in it. And boy, you remember the big frauds. You remember Madoff. You remember Enron, and this is going to be up there as one of those stories. Um, and this story was not really broken by the Wall Street Journal or by Barron's or by the New York Times. It was Coindesk, and a little bit nuanced, but David is the chief insights columnist at Coindesk, and what better person to talk to about this story? So thanks for doing this.
Yeah, thank you.
Yeah, before we go into that, just a little bit. How did you come to be in the world of journalism? Like, how did you enter? You remember the Fourth Estate instead of being a Bitcoin trader or whatever
hmm
everyone else does. What was your path into that career?
yeah, I mean, I had a fairly interesting path. I actually initially was planning on becoming an academic. So I actually have a PhD in sociology with a focus on media and technology. But I sort of figured out ahead of time before I got in too deep that academia wasn't necessarily the right fit for me. And so about 10 years ago, I made the transition to writing full time, and went from there.
That's great. And cryptocurrency kind of caught your fancy as a topic worth covering at some point. Is that what happened?
Yeah, and I think that one of the reasons I've been able to be successful in pursuing this topic is that I do have that academic background with kind of the broader context of the big sweep of history. What are the really new things that come along, and what kind of impacts do they have? And so I was lucky enough back in 2013. I started freelancing for Fortune, wrote some very early stuff about crypto for them. And it has obviously in fits and starts, but it has definitely fulfilled my
Yeah.
prediction at the time that it was going
Yeah.
to be a big deal.
Well, this has become the biggest, just the biggest possible story. I mean, I think most people know the rough outlines, but FTX emerges. And what is FTX? It's a big cryptocurrency exchange with a notable founder, a guy by the name of Sam Bankman-Fried. And we're just in a world of acronyms, I guess.
Mhm.
FTX and SBF are the two
Right.
that we need to keep straight.
Yeah, and I'll try and say Sam Bankman-Fried and not SBF because that was, at least for a time, a term of affection that is no longer present.
Appropriate.
So,
Yeah, right.
um, yeah, I mean, what is FTX is definitely the key question because on paper, FTX was a crypto derivatives exchange. They did offer spot markets, I believe, but their primary thing was offering futures and other derivatives, including a lot of truly insane stuff that, even leaving aside what we found out later, they were doing it offshore because it's completely illegal in the United States.
Right.
Um, so that's what it was on paper. In reality, it seems to have been something much more weird and complicated because FTX had a relationship that was ongoing with Alameda Research, which was a hedge fund that Sam Bankman-Fried had actually started before FTX, um, based on his experience as a trader at another fund called Jane Street. And that's sort of a key part of the story is that Bankman-Fried was not a crypto guy. He was a trader who decided to trade crypto, which is a crucial distinction. But the behind the scenes of FTX and Alameda was that there was a lot of anxiety about their relationship since they were founded by the same person. But for basically for most of 2020 and 2021, people were of the mindset that this is crypto, they're offshore, it's unregulated. So, this conflict of interest between running a hedge fund and running an exchange that would normally be a red flag in traditional finance for reasons that we can go into, we'll give them a pass for now because it's crypto. And that obviously turned out to be a mistaken mindset, and they really were doing some stuff behind the scenes that was unsavory and taking advantage of that relationship.
And why did he? You mentioned that he had affection. You know, this guy, he raised a lot of money from, I believe, venture capitalists, if that's correct.
Mm-hmm.
Had a lot of, I don't know, respect, or people just want his money from politicians. But he presented it in a very odd way. He's sort of a, if you ever seen him, he's a, I don't know, a little bit sloppy, wears a t-shirt and like board
Mm-hmm.
shorts around. And what the heck happened? Like, why did this appeal to people who gave him, I think, billions of dollars?
Oh yeah, I mean, it was definitely in the neighborhood of a couple billion of total VC that he attracted, which is, crazy on its face because FTX was only ever valued at about 10 billion. So he gave away a lot of the company for cash, which maybe should have raised some eyebrows. But yeah, the style question is fascinating, and I would say there's kind of two prongs to it. I mean, one is simply that crypto is different. I mean, I don't present as perhaps a cookie cutter financial journalist would. And I think that that's fairly common. And so I think that um, people gave him a pass because of that. But I think maybe more to the point is the much longer narrative of these like tech boy geniuses that people want to get behind. And, Mark Zuckerberg was not a conventional CEO when he was first starting out. And that's kind of part of the appeal. It's not just we're going to overlook this, but like, you're so disheveled, you must be a genius.
Right.
And even beyond that, there were things where like he was playing video games while on calls with venture investors, and somehow that added to the mystique instead of being a red flag. And I think that to some extent, this may be the end of the road. I mean, obviously, the interest rate changes are going to end the road in another way. But Sam Bankman-Fried may have cashed the final check for casual chic in
Right.
the tech industry. I think people are going to be a lot more. They're going to have their guard up for that kind of thing a lot more going forward.
Yeah. And what do you think that was enough? There's been a lot of criticism of the venture funds, which I'm not, which might be more nuanced in the sense that, people say they didn't do their diligence, and that this fraud occurred. But, diligence doesn't really uncover fraud necessarily. So it wasn't, I guess I'm not saying this well. It wasn't like they did diligence and he said KPMG was doing their audit and they weren't. It seems
Mm-hmm.
like it was known to the venture capitalist that he was some 20 something odd guy who'd never run anything. It was based in the Bahamas. There's no auditor that anyone had heard of. There was no
Mm-hmm.
CFO. So it wasn't like he said, oh, I have the former chairman of the SEC on my board. Like it seems like the data set was sort of, you
Mm-hmm.
know, it didn't mean he had to commit a fraud, but it seemed like if he did commit a fraud, there was nobody there to stop him.
Right. Yeah. And I think that you definitely make a good point that a lot of this stuff would have been invisible to VCs unless they like really went at it hammer and tongs. But there are other aspects of it that I think would have been more transparent. And I think this has been kind of a theme with VC and crypto over the last year, is that it's not so much traditional due diligence that was lacking. It was a basic understanding of what was going on. And not to draw a false equivalence, but just by point of reference, there were also a lot of venture capitalists invested in Luna and Terra, the stable coin that collapsed earlier in the year and was sort of the keystone that set off a lot of this stuff. And if you got somebody with like an MBA from Wharton and paid them 75K for 6 months, they would have identified that the Luna thing was completely absurd and was never going to work. And it wasn't that there was any fraud. I mean, there was fraud, I think, in that case, but the big fraud was kind of out in the open. The big fraud was saying we're going to create this money out of nothing. And in the SBF and FTX case, the there's like two kind of separate frauds there, right? There is the fact that they were not being good stewards of customer property. That's one thing. But a much different, related, but also kind of separate fraud was that they had issued their own token called FTT that was a huge part of their balance sheet and was being used as leverage in loans between these related entities,
Right.
which is really the nuclear bomb here. Um, and that, if a venture capitalist had asked for the most basic balance sheet in the world, they would have seen that. And if they had understood what was going on, they would have known that it was a red flag. So you're right that there are nuances, but I think that there are some things that, it's an equity-like instrument. If you asked for a balance sheet from a startup and they had some version of their own equity on their balance sheet,
Right.
that would be like run away as far as you can, right?
Right.
So that's what was going on, and that's, I think, what the big thing that the VCs missed.
And so how does this come? The FTX is out there. Now people are kind of going back in their memory and like, oh yeah, that Super Bowl, those ads were for FTX. The was the Larry David ad, and then the stadiums got renamed. And so that's kind of in the background. How do you guys figure out, when I don't think we saw this in the Wall Street Journal or Barron's or anywhere else, certainly not the regulators, that something is amiss, and sort of break this story, break the story open?
I mean, well, to be clear, pardon me. I mean, to be clear, we were just doing the reporting, and honestly, it wasn't so much that we broke the whole thing open in one scoop. It's that we chipped away at the veil of secrecy enough that other people then took actions that helped unravel the whole thing. And again, it was this transparency on the presence of FTT, specifically on Alameda Research's balance sheet. That is the supposedly unrelated sister hedge fund, was holding like $3 billion worth of this illiquid asset. And that just came about. And I mean, I don't want to put words in his mouth because this is Ian Allison's scoop. But he just has contacts. He knows people. He gets information in a way that, is certainly beyond what I'm capable of. And I can only give him praise. But we're in the industry. We work our contacts. Right. If there's something that you don't want us to know, we will eventually find it out.
Right. So for the layperson, and I say that this doesn't seem like a very complicated fraud, really, if you think about it. But what are the basic components of what went on here that were fraudulent, basically?
Yeah. Oh, what were?
Yeah, what
Sorry,
were they?
I misheard. Yeah. Well, so at the high level, it's ultimately not that complicated, but the nuances and details of how it was actually taking place are so wild that it's just very easy to get lost if you try and catalog everything. But I'll at least talk about a few things. So probably the big one, and if you take Sam Bankman-Fried at his word, which you shouldn't, but his version of events is that, and his version of events that's supposed to be defending himself is already so bad, it's like unbelievable. But his version of events is that FTX could not get reliable banking starting as early as 2019, 2020. And so they were funneling customer deposits through Alameda, especially cash, US dollar, and other fiat deposits through Alameda. And then they forgot to move the money. So they deposited money, customer funds with Alameda, credited those customer accounts on FTX with fiat balances, but then forgot to ever actually move the money. So Alameda just had an extra $8 billion sitting around. That's one version of the story.
Right.
Another version of the story, which overlaps and interacts with it in different ways, is that FTT. So FTX, easy to get mixed up here. FTX, yep. The exchange, issued what's called an exchange token called FTT. And other exchanges do have exchange tokens. Binance has a token called BNB,
right.
And there are others. And these are exchanges that are domiciled in at best light touch regulatory jurisdictions. And so they do not have access to traditional stock markets and maybe wouldn't be that interested even if they did. But in lieu of issuing equity, they will issue these exchange tokens, which are not equity, but which traders often treat as sort of having equity like properties in the market.
Right.
The exchange tokens do come with certain privileges for holders, which is kind of the premise on which they trade this way. They'll give you like some discounts on exchange fees and things like that if you're a power user. But essentially, it's monopoly money at the end of the day that the exchanges print out of thin air. And then with FTX, I mean, in some cases, there are more or less responsible ways to manage this. I don't necessarily mean to cast aspersions on every exchange that has its own exchange token, although definitely watch out. But what FTX specifically did with this was very bad. They had a very thin open market segment of the FTT token. So, maybe it was as little as 2% or somewhere in that neighborhood. But then they used the price that was being set in the open market by that very tiny slice of that float, that very small amount of float. They used that price to then set the value of the rest of their FTT. And there's a term that it's not widely used, but that I think sums this up very well and that applies to a lot of other tokens, which is low float, high fully diluted value. So low float, high FDV, which means you have a very small portion of this thing that you issue that trades in the public. You then backward that value onto your illiquid holdings, when in reality, if they had sold all that FTT at once, or even a very small portion of it, would have tanked the entire value, which is actually what happened when CZ at Binance sold his portion of it. But in the meantime, before that happened, they were using this FTT as collateral all over the ecosystem in ways that, it's contagion. That's where the contagion aspect of this largely came from. I don't even want to go into it right now, but it's tied up in their teased buyouts or bailouts of other struggling entities in the summer of this year, when they looked like they were maybe going to be bailing out BlockFi and a few other entities. But it turns out that those bailouts either were going to be in FTT or were being used to conceal liabilities denominated in FTT that would have kind of unwound the whole thing. So as you can see, once you start talking, everything is so connected that like this fundamentally kind of simple fraud was allowed to just ramify and manifest all over the place in really insane ways. And I'll just give you one more example that I think really it came close to breaking a lot of people in the crypto industry, this one, because it's so bad. But one of the things that was done, not necessarily with FTT, but with perhaps user funds or some, something that was backed up by user funds, was that probably back in 2020, Sam Bankman-Fried began extending loans to a news site called The Block secretly, and including large personal loans to the CEO of that entity that had taken over relatively recently and is not tied to the founders. So that's a whole other thing. But I mean, he did this thing in secret. He had $45 million that was loaned out to a news organization that was covering him. And so that speaks to some of the further extensions of this big con, where he was also using money to curry favor, not just in the press, but also with politicians. And we had, I'm going to forget his name. The representative, sorry, I'm going to start that over so you can cut it if you want.
Yeah.
But we also have Representative Tom Emmer last week highlighting the fact that Gary Gensler, head of the SEC, was deep in talks with FTX to potentially give them preferential treatment on forthcoming legislation. And so, this is where we get into just like frontiers of con artistry, where he had leveraged his fake money into real political influence that could have then become institutionalized.
So I want to ask you because I do want to ask you about like your sense of when he knew things, but there's something I noticed, and I am not any mainstream media is up to anything other than doing good reporting. However, it is notable that the outside of you guys, the early press, and I think it's changed a bit now, but the early press about this seemed to just everything but say it was a fraud. He flew too close to the sun, and oh, this is a big bummer
Mhm.
for all the charities he was giving money to. And boy, it just felt it was described as a bank run. FTX was not a bank. It should not have been loaning money to
Right,
anybody. Like,
right,
do you
exactly.
do you have a sense that that was going on and why that would be? Because it seems like at least the first part of the fraud, taking customers' money and gambling it, is the pretty obvious, initial fraud.
Right, right. Yeah. Well, I mean, I think that I do want to give my colleagues the benefit of the doubt. I think that, one thing to say about Coindesk is we are a trade publication. We are people who have been involved with this for a long time. I mean, I've been reporting about crypto since 2013. So the level of understanding that we have, it's almost unfair to expect the Wall Street
Sure.
Journal to or the New York Times to have that level of understanding. But I mean, I will also say, like, we eventually got the reporting that broke this, but like we were not, warning about SEF before that either. So I mean, he really was very effective con man. But I think that on the early response reporting from the mainstream media, I would say two things. First, they took their time figuring out what was actually going on, and maybe that's fair enough. I mean, they were going through something very complicated. There are multiple layers here because on the first off, people still don't really understand crypto at all. I
Mm-hmm.
mean, generally, it's very complicated. The reasons it exists and maybe has value are nuanced and multi-layered. So people were still figuring out crypto, and then on top of crypto, you have a financial scam that the crypto is not really the scam element here. It's
Right.
crypto being used in the same way that like Enron used energy trading as the foundation for a financial scam that was not really about energy.
Right.
um, FTX used crypto as the foundation for a financial scam that was not really about crypto. And so you have this multi-layered structure where you have to kind of like really do a lot of figuring out. And I can give the benefit of the doubt to somebody not wanting to scream fraud on the
Yeah,
front page the day after
that's
this
fair.
started
Yeah.
happening.
Yeah. So it comes a cropper. FTX basically fails. The guy who comes in to run it, I guess, is John Ray, the guy who kind of came in to do Enron, like to take care of Enron.
Yes,
He immediately says, oh, there's two things. The obvious one is he says something along the lines of, "I'm the Enron guy. This is the worst thing I've ever seen."
I love it. It's the best.
And then he says something, and I'll give you this quote though. When he's describing this, he says he calls the management team a very small group of inexperienced, unsophisticated, and potentially compromised individuals. Something just struck me in the back of my head. That doesn't seem like is he letting him off the hook for fraud there? Is that I mean,
Well, the important thing about fraud is that your intent doesn't matter.
right,
If you did fraud, you did fraud. And in this case, they definitely did a big fraud.
right,
And that's one thing that it seems like Sam Bankman-Fried himself did not understand when he went on this huge apology tour where he was like,
crazy.
"Oh, I just messed up. I
Right.
effed up." He was gonna say I don't know if I can swear, but he's gonna say
Sure.
I fucked up in front of
Yeah.
Congress.
Yeah.
And that's like his whole story. And he didn't seem to grasp that like even if he genuinely was just the world's biggest screw up, which
Yep.
for the record, he was not, there was more going on than that.
Right.
But even if that was the truth, it's still fraud and he's going to jail. Um, but I will say, like, I think that the question of competence is one that I would almost zoom out and say that we're now having to talk about this at a societal level, right? Because we have this huge tech boom over the last 20, 25 years now we're looking at. And in each new wave, whether it's, websites or fintechs in the 2010s, you had Wirecard, which has only recently been exposed.
Right.
I mean, there's this entire macro trend where you have exciting new technologies, you have people making big promises, and then what happens if it doesn't go the way they say? What happens if they were promising something that was impossible the whole time? Can you just cry incompetence and you're off the hook? Clearly, we've moved away from that, right? Like
Right.
I think we in 2008 with finance, we accepted the oh we just screwed up defense from the
Right.
people who designed mortgage-backed securities, and I think we figured out that that was a mistake. And so we are holding people accountable now in a way that the Enron guys went to jail, so we had a little bit of a break from
Yeah.
accountability, and we're moving back now. And
And
I guess like
Madoff went to jail, right? Like,
yes, Madoff went to
so,
jail. So we I think that incompetence may have seemed like an appealing defense for a brief period. I don't think it's going to fly on a bigger scale anymore. And yeah, I'm sorry, I'm losing my train of
no, it's
thought here, or
great.
maybe I'm out of thoughts. But
Well, it's funny. I doubt that's true. There's a crazy thing in here too. At some point, he releases a balance sheet that is a whole separate podcast. But this balance sheet is just a like you've never seen anything like it. It's a kind of a list of sort of assets, and some of them aren't assets, and it's some of his thoughts. Like it's a balance
yeah,
sheet that includes his thoughts. Like
yeah.
this story is just is it's insane.
Well, and I think that this is where again, you get like a whole other element going off in another direction, which is Sam Bankman-Fried's background and upbringing. And you have his parents who are, um, until 2 weeks ago, very highly respected business, legal, and ethics scholars.
Which, by the
And
way, is its own just little like every little crystal in this whole thing. Because wasn't
yeah,
one of his parents like a corporate governance person and another like an
yep,
ethics? Like
yep,
just couldn't have made if you wrote it down and submitted the script to Aaron Sorkin, he'd be like, come on.
yeah. And you can get into the weeds with especially his mother's work on business ethics is, especially in light of what has happened since, but honestly, just on its face, troubling. I wrote something recently about a piece that she published in 2013, essentially arguing I'm oversimplifying, obviously, but to some degree making the argument that blame in the justice system is the wrong way of thinking about prosecuting and punishing criminals. That is essentially, she seems to have, to a degree, believed that free will does not exist, and therefore
Wow.
that crime is the product of structural forces, which is,
Yeah.
in some sense, the extreme expression of an ideology that some people do genuinely hold. And there are nuanced reasons that it does have some compelling elements to it. But when you really get down to brass tacks and talk about what people are doing on a day-to-day basis, you can't go through life believing that responsibility doesn't exist and that
Right.
everything is the product of structures. But I think that I'm getting a bit off topic here. My deeper point really has more to do with culture than specific ideas. And I think that when you grow up the child of, two Stanford professors ensconced in Silicon Valley, I think that in this day and age, that comes with a pretty deep-seated sense of privilege and infallibility, frankly.
Right.
The idea that I will succeed because of what I am rather than because of who I am.
Mm.
And we saw that also with Elizabeth Holmes, who decided at age 19 that she was going to come up with a technology that nobody had ever been able to perfect before, that that thousands of medical researchers had
Just
decided
missed.
was
Yeah.
impossible.
Right.
Um, but she just plowed forward, ignored everybody who knew more than her because they were just like the old school, whatever. And I think the SBF balance sheet that you're talking about is a manifestation of that same attitude, that essentially the rules don't apply because I am right because of where I come from and because the way I was raised baked that deep into my bones. And so it's hubris.
Right.
It's self-righteousness. It is the idea, and again we get back to the ideology, right, where Bankman-Fried subscribed to this effective altruism thing where if I make a lot of money now, it's kind of okay because I'm going to give it back later. And maybe even it's okay if I cut some corners
Right.
because I'm going to give it back later.
Yeah.
And utilitarianism, I think, is the real villain here if we want to get into the big philosophical concepts.
Right.
But it's a rich Shakespearean tapestry.
It's amazing. Now, so it's come a cropper. The Southern District of New York decides to prosecute, and I guess we have an extradition treaty with the Bahamas. So he ends up in jail in the Bahamas. And now, what? One thing I want to ask you first, by the way, they were taking money out of this organization. The executives were borrowing hundreds of millions of dollars,
Oh yeah,
billions. And I understand. I think it's been reported now that the parents were actually using this money too. What were they doing with all this money? Like, this is more than Lambo money. This is like
right.
billions, or were they? I guess, is it all in a Swiss bank account?
Yeah, I mean, I think that the answer is we don't know yet. I would clarify, we know very little about the parents' situation at this point. There was a house purchased in their name, but like their claim is it was not supposed to be their personal property.
Okay.
Who knows? They were getting payments of some sort through FTX, but Joseph Bankman, the father, did have a role in the organization, so that was probably something approaching salary.
Yep.
Which
Sure.
it's unclear. But the loans to executives are like the smoking gun as far as intent, because you can't look at that. There is no universe, no matter what your ideology, no matter what your upbringing, no matter what your effective altruism beliefs, there's no viewpoint from which you can loan yourself effectively like $3 billion from your company and not and feel like that's okay.
Right.
And so that's the one where like you just can't stretch your generosity that far.
Yeah.
Because to spell it out, I don't have the numbers in front of me, but Bankman-Fried got something like 1 billion in a personal loan, and then there was a $2.3 billion loan to an entity that he owns 3/4 of.
Right.
So, it's effectively a personal loan of, several $billion. What happened to the money? And this is where we get back to like the simple complexity of it all,
Right.
which is that at least some of that money was used to make further investments, including this entity that he owned 75% of was called Paperbird. That entity apparently was used to repurchase some FTX equity from Binance, which was an early investor. And so here we get into like the real craziness of why accounting fraud is serious fraud, because you then have a price set on that FTX equity that looks like it came from a nominally unrelated third party. And that's, it's tough to really convey, but when you have what's supposed to be a third party, but is actually a related entity, and they're trading in assets that's tied to the original entity, I mean, that's a huge form of fraud.
Right.
It was basically the foundation for Enron. Was they would spin up these supposedly unrelated third parties that were actually basically owned by or underwritten by Enron, and use those third parties to buy their own stock, or to use their stock as a backstop for debt that they wanted to get off their books. So, I mean, this is just like a cardinal sin in finance.
Right.
And so a lot of those loans were essentially being used to recycle through FTX assets or equity in a way that didn't look like FTX eating its own tail, but actually was.
Right.
The full amount will take years to
Right.
account for, but a big part of it was that.
So what's your sense now as the Southern District of New York comes in? That's going to happen. Is he going to get away with it? I mean, what do you make of? Well, first of all, now all of a sudden, I mean, what do you make of the sort of I'm just a simple boy, and the ways of modern man confuse me. He's just suddenly just what the
Yeah.
dumbest guy in the room all of a sudden.
Well, I think that one thing we can look forward to is as these cases progress, we're going to get, whether through court disclosures or through people who talk to the media, more of a viewpoint on who SBF was behind closed doors. And there have been a few glimpses, but I think it will help dispel this like act of naivete that he's been putting on, because there is definitely evidence that he is a very aggressive individual and has some serious sharp elbows, even in the cases where he was dealing above board. So we'll get a different picture of who he is as a person.
Yeah.
And I think that'll be important.
Do you think there's any chance he, gets away with it, whatever that looks like? 2 years
I
in
mean,
jail, and then he's off in. I mean, there's look, who knows, but I would guess there's money hidden somewhere.
yeah. I mean, I think there's zero chance that he gets away with it in any meaningful sense at this point, just because we saw coordinated charges coming from the SEC, DOJ, and CFTC on the same day. And like they don't do that unless they know what they're doing. And notably, um, I'm gonna I hope I'm getting this correct, but it was, I believe, the DOJ charges that came out were kind of open-ended. He did campaign finance fraud. It didn't really go into the details. And that's there so that prosecutors have flexibility to look for the specifics as this case progresses. And I mean, that really, like, that's a trap that, I mean, not a trap, it's a
Right.
trap you walked into, but
Right.
it's a trap that you can't escape from, really. That noose is closing. And these regulators and enforcement agencies don't do things like this unless they think they're going to get a conviction.
Yeah.
And I mean, just based on the evidence that's totally public and already known, I mean, it's big. I
Yeah.
think that really the best he can hope for is that he gets like an Enron sentence, which is 10 to 15. But the potential is huge. And I think that people, this is a podcast, and so I'll tell your listeners that I think, and maybe there's a philosophical debate to be had about criminal prosecution and political pressure, but like the fallout here is going to depend on how angry the public lets it be known that they are.
Mm-hmm.
And I think that that's, uh, whether or not we want that to be the way our justice system operates.
Right.
Like right now, call your senators, call your congressmen, and let them know that, if you were impacted, if obviously FTX US did wind up being in the blast radius here, despite Bankman-Fried
Right.
saying that it wasn't. And so all that stuff matters. Pressure matters. Perception matters.
Yeah.
But I think based on what I've seen, people are so done with this kind of stuff. Like
Yeah.
people don't want operators like this out in the wild. And if he becomes the punching bag, the poster boy, the example that is set, he earned it.
Yeah. Well, let me finish up on a couple things real quickly. As you continue to follow this, by the way, I want to ask you something. Do you know the Michael Lewis thing? Have you heard like that?
Yeah,
So
yeah.
Michael Lewis, Liar's Poker and Moneyball, famous for just being at the place to write about financial crises as they're happening. Turns out he's been embedded for
Hmm.
months with Sam Bankman-Fried. And it
Yep.
came, I can't think it came out when his agent was pitching and boy, are they going to make some money on this, pitching the story to the networks, basically,
Right. Right.
distributing
Yeah.
services.
Yeah, and I look forward to it. I mean, I think that it'll be interesting to see what shape it takes. I mean, there have been some very respectable or previously respectable finance people who have not shown their best side in this. Bill Ackman, unfortunately, who I have a lot of lasting respect for his work on Herbalife, has not been doing the right thing here in terms of seeing what's actually going on. I hope that Michael Lewis went into this with curiosity rather than some sort of preconceived notion that this was the future of finance.
Right.
I think that obviously he's going to tell the story as it happened, and it's going to be compelling, and he's going to have stuff that I can't wait to hear
Yeah.
about because he was embedded. I think it will remain to be seen whether he actually, you know, frames it as gracefully as he framed his coverage of the 2008 crisis. But I have a lot of
Yeah.
faith that he's going to do a great job.
And so, what is the thing that you're looking as that you most want to know or most anticipating learning about this that you don't know yet?
I mean, we've already taken an hour, and this is like another hour of podcasting to go
Sorry, I
into
don't
all
want
the
to do
stuff
that.
that. But I mean, obviously, there's a huge amount of detail and nuance that's missing. But personally, I'm a columnist, and I'm a I'm a fiction writer. I'm a writer more than I am a finance person,
Hmm.
although I'm pretty heavy on both. And what I want to know is like what's going on in his head. That's the ultimate question, because when you look at somebody like Elizabeth Holmes, we now kind of know the story, right? She
Hmm.
was overconfident. She thought she could deliver. And then bit by bit, one lie led to another until it was all a lie. Similar story with Bernie Madoff, really. He you know, lost something, cut corners, and then cutting corners became all he did. But he started off doing well. Um, and so I think that probably, I mean, I don't know. The fascinating thing about FTX is that it really seems like the fraud started a lot earlier than we initially believed.
Yep.
We got some, I think, tax information a month or two ago showing that Alameda, I think it's either Alameda or a combination of Alameda and FTX, lost nearly $4 billion in 2021, which is when the market in crypto was going up and to the right
Right.
consistently.
Yeah.
So like what was going on there is a huge question. And from that question comes like, if this was going on and there were all these losses, that was at the same time that Sam Bankman-Fried was in all of the mainstream media presenting himself as like, I'm going to someday buy Goldman Sachs.
Right.
And so that's not what you do if your like pyramid scheme is slowly unraveling and you're just like trying to get it all back in one big trade. Like if you're like a normal con man, you're like, I'm gonna fix this. I'm gonna fix this.
Right.
But Sam Bankman-Fried was out there in the media saying, not only is there no problem, but I'm a genius and you should all give me more money. And so that's where it starts to look a little bit less like a kind of standard con that just got out of control and a little bit more like something considerably more malevolent and conscious and planned.
Hmm.
And so like that's the part that just haunts me, frankly, is like this really, it looks like something that either was conscious and planned from very early on, or something where there's like psychological elements at
Right.
play that are very abnormal, where, and obviously people constantly lie to themselves,
Right.
but it seems like there was either conscious fraud or a level of self-deception and you know neurodivergence
Right.
that is like beyond mere mortals' ability to fully comprehend.
Yeah.
And so that's the element that is just stuck in my gut like cancer, as The
Yeah.
Wire puts it. I want to know what was inside of his head. I
Yeah.
badly want to know what was going on inside that fuzzy little noggin.
Well, hopefully, in the fullness of time, we'll figure it out. I mean, this has just been the story itself is insane and so multifaceted, and I just really appreciate your shedding the light we can so far on it. I really appreciate it.
Yeah, thank you. And I mean, we are still so much in the dark about all this stuff, and it's going to be the work of the coming year to really try and put it into some comprehensible shape.
It's amazing. Well, thank you so much. This has been the Something About Your podcast. David Morris, my guest. Talk to you next time.